Good evening and welcome to another episode of the weekly market wrap. My name is Daniel Ang, and today, of course, is Sunday, April the 20th, and we are into the third week of April. And we all knew April has been so far very, very volatile. But this past week we have a little bit of quiet because of the Easter holiday. So, not sure what will the market do in the coming week. Okay, let's continue. Now, before we go into the content itself, I want to remind you guys that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFD, or any kind of margin financial products. And the trading of any kind of margin products do carry risk, and just be aware of your risk tolerance. And I want to also remind you that I'll be sharing with you my views on the various markets. Just be aware that those are strictly my views and has nothing to do with the sponsor. Okay, and today's sponsor, of course, is IronFX, a broker with operation in 180 countries, offering more than 300 products for trading. And they have been sponsoring my event for quite some time now. So I just want you guys to know that I'm acknowledging their sponsorship. And this presentation has not been vetted by any kind of regulatory body. Now, the week itself, this is the week's activity. We have only 4 trading days this past week. Friday, of course, was Easter Friday, so the US market was closed. So we have on the first day, equity markets gaining a little bit of strength from the previous week rally that we saw after that 90-day pause. Then, of course, on Tuesday, the market was also quiet before the market actually traded down after the release of the retail sales. So we can see that although retail sales has actually gone up, but market has actually gone down on the back, not so much of the retail sales number, but on the back of the Fed Chairman Powell confirming that he is not looking to cut interest rate anytime soon. So the next interest rates decision will be on May the 7th. So now market participants now have very little expectation going into May, knowing that his focus is on the impact of the tariff, because the chairman has been telling us for quite some time now that he said the scope of the unilateral tariff as well as the reciprocal tariff that Donald Trump has actually unleashed on the market is a lot wider than market expectation. So he feels that he's going to monitor the impact on inflation. So at this point in time, there is very little scope for cutting interest rates, not knowing the impact of the tariff on the inflation front. Then on Thursday, we have a bit of a mixed bag. We have the Dow Jones actually closed negative, whereas the other two barely managed to hold on to their gains. Okay, so this is a bit of a mixed week, but I think going into the this coming week, I think it will be more of the same, because I do expect 2 weeks of some kind of consolidation, which we have seen so far this past week. Now, in terms of the other asset class, as to the dollar, the bar in green, we can see that the dollar remains quite weak. Okay, although on Thursday itself it closed marginally below what it did, but on Wednesday we can see that the market for dollar actually went down. Now the dollar currently is trading at levels we have not seen since September of 2024. So the overall picture does suggest that we may see further losses in the dollar value. So it also means correspondingly the other major assets, the other major currencies may actually benefit from the current weakness in the dollar. Now, in terms of U.S. Treasury, not the yield, the bond itself, we can see that the bond market has come back a little bit. On Monday, you can see that the market actually gained almost 1%. That is the bar represented by the purple bar. You can see that on Tuesday and Wednesday, there was not much of activity, even considering Thursday. Though we have seen a little bit of rebound in the sell-off in the bond market, and that also means that the yield has come off from its most recent high. As far as gold is concerned, gold actually managed a new high. So we can see that activity in the gold market has not been spectacular this week. On Monday, Tuesday, and Wednesday, we don't see except on Wednesday. Wednesday, we have a major spike in the price of gold, again back to all-time high. On that day itself, on Wednesday, gold gained more than almost 3%. So we can see the bullishness in the gold market continues. But as a word of caution, I want to remind you guys that my view is that going into either the end of the month itself or early part of next month, a peak may finally be in place in gold. So be very, very careful as the market breaks new high. Be very cautious in chasing after that rainbow. Okay, and then oil have a big move this week on Wednesday and Thursday. We can see oil prices has gone up on, especially on Thursday. It went up almost more than 3.5%. So that is big in terms of because we all knew energy prices has been on the retreat because of the fear of a global recession. The demand for gold and the demand for oil has actually been hampered. But it does seems that oil prices seems to have rebound really strong. So there is scope for continued strength in the energy markets. So the week itself has been pretty quiet. We have this piece of news coming in last Sunday. Remember this time last week on Sunday, the Trump administration has actually waived the tariff on certain product range in terms of the smartphone and microprocessors as well as computers. So this has largely benefited Chinese exporter. So the market actually took a bounce. Okay, but again, very quickly, the following day on Monday itself, we can see that the Trump administration came out to actually say that the exemption was only temporary. So not to make of this, but I think for now, the 10% universal tariff still applies for all imports into the Americans. Okay, so as far as market is concerned, I think it was muted because the market was getting ready to rally on the get-go on Monday. But on Monday, you can see officials from the Trump administration come in to dampen expectation of a permanent exemption for this product range. Then on midweek itself, we have the White House again being the anti for Chinese imports into America. Now the tariff is at 245%, but China has already made it known that they are not going to play this silly game because beyond a certain percentage, while I say beyond 100%, it has become meaningless. Okay, because at the end of the day, the Chinese are not going to sell anything directly to the Americas, and so they don't care what is the latest tariff, additional tariff that the Trump administration has imposed upon them. So at the end of the day, this wasn't a big news, although psychologically, the Trump administration like to believe that they have punished China for the audacity to actually retaliate against their initial tariff. So again, we are now at a standstill. But there are other things that are happening along the peripheral. Now you understand that for quite some time now, two Chinese companies have become very popular in the States. We are talking about Temu as well as Shein. Okay, these are small parcel, very low cost things that American can buy online through their apps, and they get it shipped to America because most of the value are below $800, and there is a loophole. Anything that's below $800 does not come under tariff. Okay, so for a long time, these two companies has been doing rolling business in the States, but I think with the reciprocal tariff, I think Donald Trump has closed that loop. So now it does not allow these small packages to actually sneak through the U.S. custom without having to pay the regular tariff. Okay, but the Chinese, being Chinese, I think they have been very innovative, and the last I heard was over the last 24 hours, I heard that the Hong Kong Postal Service has actually stopped allowing any parcel to be sent to the United States. Okay, this is I think in direct reaction to the fact that the White House has actually close that loophole, allowing all these small packages to get through. And not only do the small packages not get through, the Hong Kong Postal Service has made it a point whereby they actually do not allow any kind of parcel to get into the United States. At least you can see that used to be the China factories will export through Hong Kong. They will ship it to Hong Kong, and then for Hong Kong to send the parcels across the Atlantic into the United States. Now there is a big problem. I saw some videos that suggest that some of the medical services has actually approached Donald Trump and complained that medical devices and medical products are not getting through to United States, and there is a risk that in a very short notice, all this will dry up in terms of mass, in terms of shrink, in terms of all this what we call expendable. Okay, they are not getting through the United States, and for in some extreme cases, certain hospital may have to shut down because they are running out of supplies. So those medical supplies that they import from China now are not getting through. So again, there are also other news that I've been hearing from other sources in which the Chinese now are very, very innovative. They do not export direct to United States, but I think during the peripheral, no, during the reciprocal tariff, I think certain places in the Middle East has not been hit. Okay, so places like the UAE, for example, the United States did not slap punitive tariff on, let's say, UAE, and the Chinese has actually routed their products to UAE for export to the United States. So this is like a whack-a-mole game. Okay, it's like a police and thief. There is always loopholes, and the Chinese are pretty good in exploiting all these loopholes. And I think at the end of the day, the entire tariff thing may actually fall apart. So these are things that I've been hearing. Okay, so just be aware that I think at the end of the day, if Trump do not get the response that he wants China to come to the negotiation table, accept their terms. But now I think at this point in time, the Chinese are simply not interested to talk to the Trump administration because they have not been able to keep to their previous agreement all this while during his first term. And so I think the Chinese has come around to the idea that the Trump administration is not reliable to actually strike a deal because they do not respect agreement. So I think they are just going to sit tight. And the longer the Chinese sit tight without coming to the negotiation table, I think it's almost inevitable that Americans will actually use their military hard. Okay, right now there is uh, talks about a major military exercise in the South China Sea. I think they are going to exert military pressure on China, and it's a very, very thin line from getting from trade war to hot war. So we will have to keep watching this, especially as we go into the month of May. Month of May is definitely going to be a time in which the situation may actually get a lot worse. Okay. So, like I said earlier on, midweek, the Fed chairman has actually spoken. I think he spoke at the Chicago Economic Forum, and everybody is just waiting for him to give some hint that he may actually cut interest rate to save the economy. Because the fear right now is that the global economy, because of the tariff and the counter tariff between the two largest economy in the world, may actually lead to a dramatic slowdown in economic activity, and the global economy may be hit with a recession. So market participants were actually very, very keen to see or to hear what he has to say. But unfortunately, he did not give the comfort that they were looking for. Powell himself did not give any hint that he will be looking to cut interest rate anytime soon. And yep, he said he's going to monitor the impact of the tariff on inflation. So he's definitely going to keep his eyes focused on the inflation front, and we will have to continue to watch this as the world stumbled towards another major calamity. Okay, so the only thing that came out this week was actually the retail sales. So we have the retail sales was actually robust. Previously in the month of February, the growth in the retail sales month over month was only 0.2. However, there was a major spike in retail sales. Of course, this retail sales is on the back of front running the tariff. So there's a lot of companies and a lot of retailers actually was actually stocking up, knowing that the tariff is coming. So this is not representative of a major rebound in retail sales. In the months ahead, possibly this number will actually come back down after the tariff has been imposed. Okay, so right now there's a 90 days pause. So the 90 days pause that we know is going to create 90 days of uncertainty. Okay, nobody knows for sure whether they should stock up, they should go back to normal ordering of goods. Really, nobody has the answer. So for the next 3 months, unless there's another change, another flip flop from the Trump administration, I do not believe that this number is going to be elevated. Okay, whereas you look at the sales control group, which consists of not including the sales number from auto dealerships and building materials and gas station. For example, we can see that the numbers are actually came off. Okay, from the number in February was 1%. Although it was revised upwards to 1.3%, the latest number for March is only 0.4. So we can see that when you look at retail sales from the control group itself, it has actually not been doing well. Okay, now we are back to where it's normal. So there is nothing to see here to suggest that there is any insight that we can glean from this retail sales number. Okay, so I think there's a couple of questions I think that's been posted. Let me see what are the latest question that you want to ask me. Janice is asking me, if inflation is going up and economy not doing well, what will the Fed do? Currently, the Fed himself is looking at inflation because there is still no sign that a recession is coming just yet, although the fear is overwhelming. So what may actually happen is that United States may get the worst of both, okay? In terms of inflated prices because of the tariff and slower economic fear because of the fear of the unknown, okay? Because the world has never faced a situation such as this, okay? What the United States has done, or rather what President Trump has done, is basically to uproot all the rules that were in place after the Second World War. 80 years of progress has been end. Okay, so if you have been following the news, you would have heard that the Singapore's senior minister Lee Hsien Loong has said that we are now in uncharted territory because all the previous trade agreement all has been torn apart. There's no such thing as most favored nation anymore. The FTA that we signed with United States means nothing now. Okay, so we are definitely in uncharted territory, and this gives rise to a fear of a global recession. It is very, very real, and I think we should all pay notice. It's not business as usual. So going forward, the United States stands a very real possibility of being hit with higher prices and lower economic growth. In short, we are looking at a potential stagflation. So in a stagflation, the Federal Reserve is caught between two rocks, okay? Because if the interest rates, there is the risk that inflation will flare. And if they do not cut interest rates, then the economy cannot be resuscitated. So it could be a very, very tricky situation for the Federal Reserve. And the latest very obvious thing is that President Trump is trying to get rid of the Fed chairman because he has not been willing to cut interest rates, much to his displeasure. But I think the Federal Reserve is actually quite sensible right now because they simply do not know what is the impact of the tariff. And if the Federal Reserve cut interest rate right now, it runs the true danger of actually reigniting inflation. So Trump needs to get interest rates down because in less than 2 months' time, the US Treasury would have to face with a dilemma because as much as $6.5 trillion of treasuries are maturing, meaning to say that they have to refinance. Now, remember 3 years ago, 5 years ago, actually, 5 years ago during COVID, the Federal Reserve cut interest rate all down to the bone to at zero, and there was a lot of short-term treasuries were actually being issued. The US borrowed a lot of money at near zero interest rates. Now those bonds are due for refinancing. So at the current yield above 4%, if interest rates do not come down and they need to get the Federal Reserve to cut rates so that the yield can come down, okay, if they cannot get the interest rate down, that means to say the United States will have to refinance $6.5 trillion in new treasuries at above 4%. Right now, they are paying something like $1 trillion per year just to service the gigantic national debt of 36.2%. Okay, so imagine if they have to finance the new treasury above 4% or anywhere near 4%, it is totally impossible to service. Okay, so I think there is that urgency to get interest rates right down now. Okay, and the Fed chairman is not playing ball. So there is also that risk that at some point in time, something bad is going to happen. Okay. Buck is asking, dollar is so low now. When the Fed cut interest rate in future, do I expect dollar to tank further? The immediate reaction is yes. Okay. When I look at the chart earlier on, I was referring to the dollar index. The dollar index is currently trading at levels not seen since September 2024, and there's still a little bit of scope for the dollar index to come off. Later on, when we go to the chart, I will show you why I think there is still room, technically speaking, for the dollar to continue to ease further. Okay, but at this point in time, is it still worth our while to continue to sell dollar? Just be very careful because the bulk of the move has already happened. So we've got to be very, very careful. Okay, now let's continue. The Dow Jones, this is the daily time frame based on the closing price. We can see that the rebound that we saw 2 weeks ago is beginning to lose steam. Okay, this past week, the US equity market seems to have given back a lot of the gains, but not by a lot, it's only 50%. When you look at the Dow Jones charts on a close-to-close basis, the low was 36,611. So the closing price on Friday was 39,142. So it has lost back something close to 50%. So is it going to continue lower or has a low been is already in place? There is that risk. Both can happen. Okay, technically, I think there's a very good chance the low at 36,611 may actually be the temporary low. Although based on the wave theory, there should be one more low below this level. Okay, but we have to watch. But I think in the next couple of weeks, all the way to maybe the first week or second week of May, okay, I think we could be in a period of swings, extreme swings. Okay, but going into May, we want to be very careful selling equity markets because I think at some point, like I said earlier on, May seems to be a very, very dangerous period to be selling equity markets. Okay, this pullback, severe as it is not has not entered into technically a bear market just yet. Okay, so be very, very careful chasing this market. So in the S&P 500, we can see that the pullback has been a lot shallower. Unlike the Dow Jones that have pulled back 50%, you can see the pullback in the S&P 500 from its most recent high after the 90 days pause. You can see that it's only about pullback maybe less than 30%. So we can see that if the S&P 500 is on firmer footing right now. So in terms of the ability to see back the low at 4,835, I think the S&P 500 stands a better chance of continuing to trade higher in the weeks to come. Okay, so this is based on the amount of pullback we have seen so far in these two major equity index. In the Nasdaq, we can see the rebound is the sharpest. Of course, going into the year itself, we can see that the pullback in the Nasdaq 100 has been the deepest. Okay, so the rebound is understandably also the strongest. And from the 90 days pause high, as of the end of trading on Thursday, we don't see very, very major pullback in the Nasdaq 100. That gives rise to the possibility, very, very high chance that the low is 16,542 in the Nasdaq 100 could be the low so far. Okay, going into the into May. Okay, so just be aware that the market has been showing signs and have not given back a lot of those gains that we saw after the 90 days pause news was announced. So here we have the gold market. Gold managed a new high on Thursday. The new high is $3,371.90 per ounce in the spot market. Now, as gold continue to surge higher, it's becoming a little bit hairy to be chasing right now. If anything, I won't be buying, but it's not time to sell just yet. I think there's scope for maybe one more run up, okay, to a fresh all-time high in the coming 2 weeks. If that's the case, that could be the scenario. But once, for example, let's say $3,500 per ounce is hit, I will be looking keenly for a possible top, okay, at least a temporary top, okay, because the market right now is so firm, the momentum is still very much in favor of further gains in gold prices. Perhaps it's time to look at silver, for all I know, because the momentum is such that gold right now is so hot, it's not coming down. But at this current level, anything above $3,370 is a little bit hairy to buy, in my opinion. Okay. Now, crude oil has bounced. The low traded was $55.12. This is about the lowest I've ever seen. The entire oil market has flipped into bearish territory. Okay, but you can see the rebound this past week has been very encouraging, possibly suggesting that the low at $55.12 could be a temporary low before the market rebound. So going forward, if you are going to be in the market for a short-term gain, perhaps we can follow the market higher. Okay, if there's going to be any kind of decent pullback in the lower time frame, maybe we can look for levels to actually participate in the rebound, because the market is so bearish, and I think everybody's on one side of the market which is selling. So now this rebound is actually quite promising, in my opinion. Okay. So the dollar index, this is the one that I'm talking about. But what I'm showing you here is the close on close price. You cannot see the pattern here, but we can see that the dollar index has broken below the 100 levels. The last time it broke below this level was actually last year. Okay, so now dollar index is trading below 100. Okay, so there is scope for further losses. Yeah, in my opinion. Okay, so watch it later on when we go to the chart itself. Now, the bond yields was the major story because the bond yield has been surging. The low is 3.86%, and at some point it traded to 4.5% in a very, very short period of time. Now, for the yield market to actually rally so much is a bit unusual because we have falling bond prices, and the bond prices is a reflection of the loss of confidence in US assets or US dollar denominated assets. So we can see there's wholesale selling. Up to this point in time, there was still a lot of rumor. Nobody know who sells what. Okay, there were rumors that the Japanese themselves have been selling. So there are also rumors saying the Chinese and the BRICS are also selling the U.S. Treasury. But the other news that was not very much in the news is that some hedge funds has been caught on the wrong side. They have, if you understand what is basis trading, okay, go and Google what is basis trading. It's basically an arbitrage trade, usually a very, very safe trade, but I think some hedge funds has actually got caught on the wrong side, and they are forced to sell their positions at a loss, and that has actually caused the U.S. Treasury to be the victim of this sell-off 2 weeks ago. Again, there is no confirmation. Nobody is saying for sure what really happened. But I think at a point in time, U.S. Treasury yield is going to be a bellwether because, like I said earlier on, the U.S. government needs the yield to come down. Okay, it's quite synonymous for bond yields to be equate to interest rates because the two are highly correlated. Okay, so if bond yields are high, okay, because there is not enough buyers of new issues of treasury. We know the most recent auction in the US treasuries has not been received very, very well. It suggests that there is not a lot of committed buyers. So in order to attract more people to buy the latest issue of treasuries, they have to make it attractive to the investors, meaning to say that they will have to up the yield. So long as the yield remains elevated, there is very little scope for the interest rates to come off. So like I say, if they cannot get the interest rate to come down, the maturing treasuries to the tune of $6.5 trillion would have to be financed at much, much higher yield. And this is not all. This year alone, I think the US Treasuries needs to refinance something like $9.2 trillion in maturing treasuries, with the bulk coming in June. Now we are almost towards the tail end of April. So that does not give the US Treasury a lot of time. And that is also adding to the urgency of why President Trump is trying to strong arm the Fed chairman to cut interest rates. which is not happening. Okay, so this is only government bonds. There are also a lot of corporate bonds that were financed at near zero interest rate 5 years ago, and those are going to be due also. Okay, so between the government's need to refinance maturing bonds, the private sector also have the tsunami of bonds they need refinancing. So all in all, it's going to be a very hairy year. Okay, so interest rate don't come down. I think not only the U.S. government will be on the hook. I think a lot of companies definitely standing on quicksand. Okay, so let me answer some of the questions here. There are more questions now. Wei Ren is asking the Dow Jones drop because United Health missed result. Yes, this is the latest one. United Health, I think they lost more than double digit this past week because they missed earning reports. So this is something to watch, okay, because they are also a major player in the MediSafe, MediAid, okay. So just be aware of this. Thank you for bringing this up, Weiren. And Tanvi is asking, what are the impacts of stagflation in US markets for us as investors and traders? Would the market be bearish? Technically speaking, I think it may not look like the market is bearish just yet because, like I said, the longer term buyers suggest that we may, I will not be surprised if we see new high in on Wall Street. Okay. However, the equity markets is not a true reflection of the underlying economy. Now, it's going to be a period of slow growth. Okay, one is going to be skewed towards the downside as well as to sideways because we have two opposing factor. Okay, elevated price, slower economic growth means U.S. consumer will not dare to spend. And if we understand the U.S. economy is largely a consumerism economy, then that would be bad news. So you can view it with a negative light. Okay, whether that will be the condition for Wall Street to rally higher. But I think the Wall Street, the way I see it, that the long-term trend has not turned bearish despite uh, the Nasdaq briefly went below 20% decay this year. Okay, from the peak to the low this year so far, we have seen the Nasdaq actually was down more than marginally beyond 20%. Okay, that put it into bear territory. But the rebound that we saw after the 90-day pause has actually corrects a lot of those sell-off. So my fear is that if something bad happens, especially in Europe, because the NATO nations led by France, UK, and Germany seems to be wanting to support Ukraine. Okay, and if that result in an escalation in the war, there will be a massive capital flight from Europe. And if you have capital flight, okay, I think I've mentioned more than once, the money is going to flow westwards towards the United States and into US equity markets. So maybe despite the stagflation fear, which is generally speaking going to be bearish, the shot in the arm from all this capital flight, okay, should there be an escalation in the war in Europe, for example, then those capital that is comes in hot money that comes into the United States may find its way into equity markets, and that could be the basis in which Wall Street may actually chart into new highs. Okay, so this is just pure speculation, but do watch out for May. I think May is going to be that window that is likely to be very dangerous. Okay, David Hong is asking, is bond yield movement now more important than what the Fed can decide, even if Fed cut rates? As if no buyer, then bond yield will need to rise. I think the pressure is on the yield to go even higher because simply there's no buyer. Okay, if the US Treasury needs to refinance, they need to issue new bonds. Okay, and if the take-up rate in the most recent auction is anything to go by, then it's obvious that you have to entice investor by getting by offering better yield. Okay, so if yield is likely to stay elevated, I think we will have to continue to monitor because high yield is something that we want to watch because a high yield means if the US economy should slip into a recession, for example, then a high yield will not work because higher means higher interest rates. Okay, and it will also fit into the scenario of a stagflation. So yield is something that we want to watch, because I think at the end of the day, the market is not truly looking at equity markets, but I think they are looking at the movements in the bond market. In terms of bonds, we are looking at US Treasuries. Okay. Now, another question posted by Tanvi is that basically is about the global liquidity and where the best opportunity among the worst is despite economic conditions. Yes, it's about liquidity. Okay, if liquidity dries up, that would be bad news. Okay, so will the Federal Reserve continue to pump liquidity into the market, especially if there's going to be a seize up in the marketplace? So again, we will have to watch this. Okay. Now, let me know what is the first market you want to watch. First is, of course, equity markets. Anybody can give me some idea what you want me to talk about? All right, since nobody wants to take the lead, I will have to pivot to the chart itself and show you the US equity markets. Right. Let me talk about the Dow. Now, this is the monthly time frame. You can see the low is 36,000, almost 500, and we still have negative closing. But we, of course, this is not the month end closing, so we are still uh, 2 weeks to go before the month end. Anything could still happen. It could end up to be quite a disaster. But I think at the end of the day, we want to take our cue from maybe the next best timing, which is the weekly time frame. Here we have the weekly time frame, which is very much still in favor of higher prices. The dominant trend is still very much favoring the upside. And this is that 90 days pause move. You can see that the market has actually gone uh, almost vertical. So this has been the market that maybe has already confirmed the low. The low that we saw at 36,494 on this platform do suggest that there's a possibility this low may actually hold. Okay, but again, unless something else bad happens, the fact that the Dow Jones do not see a major pullback, and we can also see earlier on the pullback in the S&P 500 and the Nasdaq 100 was relatively shallow, suggesting that there is still a lot of people holding on to long position. Okay, so again, here we see a real possibility that the low at 36,494 in the Dow may actually hold. Okay, we will know as we get closer to the month end. Okay, so this is the daily time frame. The daily time frame has turned bearish. Okay, so the monthly and the weekly time frame remains very, very bullish. Although the medium term, we can see based on the daily time frame, we can see that the market has hit 50%. From 45,000, almost 100 down to 36,500, we can see the market has rebounded back 50%. And then slightly a little bit more. But in the last 2 days of trading before the Easter Friday, we can see prices are easing back. Okay, so this is not so much of new selling position. I think it's more like profit taking going into a long weekend. So here we are. The risk of should there be another pullback? I think the risk is uh, possibly suggesting that there is going to be some kind of a buying possibility. Here we can see that what looks like a potential three wave. If we do get a decline just marginally below 38,430, that will complete the three wave move. Okay, and then if anywhere after that point we see a reversal in the 1 hour or the lower time frame, then that could be the cue that this pullback is over and the market is going to be following this momentum here, which is a massive run up in prices. Okay, so if there's going to be a drop below 38,431, look out for possibility, some kind of buying interest to resurface, and then from here onwards we could resume this rebound. Okay, I think that could be one scenario to look out for. In the S&P 500, we see something similar. Okay, we don't briefly just to show you the monthly. Again, like I say, we have 2 more weeks to go before the month end. So this one is not clear enough as to the internal structure. We want to go down and look at the weekly. Now, the weekly itself suggests that this move here is only one leg. Although technically, if you look at it in this part here, especially in the lower time frame, there could be a A, B, C. Okay, so the pullback after the massive run up in prices 2 weeks ago have only seen a very shallow decline, suggesting there is inherent strength in this S&P 500. We want to take this to explore further. Now, similar to the Dow Jones, the daily time frame has turned bearish for the S&P 500 as well. Early on, this suggests that this area here, okay, could be part of a three wave. Okay, so this is a three wave move, and the market has actually hit more than 100%. So if I want to put this, so long as it doesn't extend beyond the 1.618, which is the other number that I'm more concerned with, okay, which is going to be, if there's no decay below this level, and a closing below here would be bad news, okay? But for now, I think the risk is not very, very high. In terms of the market being firm, I think it does looks to be a little bit firmer than the Dow Jones. Okay, so S&P 500 does have that posture to remains elevated. Okay, so if you look at the 4 hours, for example, similar structure is likely to unfold. We can see that there's potential of a three-wave pullback. All I need is for the market to go marginally below this level, which is at 5,114.67, just a marginal low. Ideally to hit the 5,062.8, okay? Then that will be a three-wave equality move. And then from here onwards, if we do get a pullback, look out for potential buying signal here for another run up in prices. Hopefully it will be beyond 5,732.45. And that will make the entire markets very bullish. Let's take a look at the Nasdaq 100. Same thing, we don't see much in the monthly time frame. Too early to say because we have 2 more weeks to go. Let's take a look at the weekly. The weekly itself has seen a rather strong. Now, this in terms of comparison against the other two index, like the Dow Jones and the S&P 500. Now, the Nasdaq 100 has a higher close for the week. So this is about the only major equity index that actually closed relatively higher than the week before. Okay, so this could be something that we want to note. In the daily time frame, are we going to see some kind of pullback? We also see that the fact that the daily time frame have also turned bearish for the Nasdaq 100. Okay, so but where it is right now, to take out this high here, which is the point of invalidation, is 20,349.6. I think that the possibility is a lot higher. It's a lot nearer to this to take out this higher. Here is the three wave. If there's going to be a three wave, we also see something very similar like what we saw in the Dow Jones and S&P 500. So if I have to do this, I'll put it at 1. You can see that all I need is for the market to go down marginally lower than this level, which is 17,790. Okay, equality level is at 17,666.77. So it's doable, very, very doable. So from here onwards, because of the run-up in prices is a lot more pronounced, there's a very good chance the first index to break the high here will be the Nasdaq 100. So keep your eyes on the Nasdaq 100 for clues that the market has flipped from negative to positive. Any question for me? There possibly new question. Let me have a look. Wei Ren is say what is that? The 3SP. Not sure what you're referring to, Wei Ren. The SP and the Dow. Okay, Hang Seng, I will talk about that later on. And yes, Wei Chan also wants to know about Hong Kong. Wei Ren says that it seems that the Dow Jones, S&P 500, and National 100 is well supported on the weekly chart. Yes, it does have that look. Based on the chart you showed earlier, yes. Oh yes, you mentioned that May is a potential dangerous period to short the index. May I know why this is so based on the chart? No, it's based on something that has not happened. Okay, but the signs are not good. Okay, we have seen now certain news wires, or not exactly news wire, certain chat group in TikTok has actually shown Russia has been attacking a lot of high mass batteries. And these high mass batteries are actually manned by regular NATO troops. So this is as clear as we can get as far as the participation of NATO troops in Ukraine. And if that is nobody has actually confirmed it, okay? But if NATO is sending their troops and they are actively participating in that war, I think it risks escalating, okay? Because the Article 5 suggests that if an attack on one is attack on all, then let's say, for example, if Russia actually hit a major NATO pocket of soldiers, would that turn into something nasty? The risk is for a false flag. A false flag is something that they created, okay, and then to blame the other side for escalation, and then that gives them the excuse to actually join the war. So the risk of a false flag, as far as those report from TikTok is concerned, I think there is this clear sign of escalation and clear sign that NATO regular troops are participating actively in the war. Okay, and this is a no-no as far as Russia is concerned, because if NATO troops have actively participating in the war in Ukraine, that means it's no longer just a war against the Ukrainian. It is going to be NATO against Russia. Okay, and that could be something really, really bad, because I think China has made their stand very clear. If NATO is involved and the war in Ukraine spills over into a fight between NATO and Russia, I think China has already stated their stand that they will actually join the war. So this is a major, major escalation. So if that is going to happen, something bad will happen. I think gold prices is going to fly for one, okay? And like I said earlier on, before the market have that, the capital will have to run first. If there are signs that capital inflow into the United States has escalated, then it is just a prelude to something really nasty. So it is not in the chart, okay? But it is the sign that the geopolitics is getting very nasty. Okay, let's continue. We will look at the Asia market. Earlier on, you guys say you want to see Hang Seng. So Hang Seng in the monthly time frame is not really quite convincing. But the fact is that in the month of February, there was a what you call it, uh, 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 there was this bar here that looks really nasty. Suggest, because you can see this is a three-way bounce. It hit target at 24,780 and then closed like this. This is to me a classic reversal signal. So this month we see lower prices. I'm not surprised at all. Okay, but whether this means that there is a top in place in the Hang Seng, we will have to see in other time frame. Okay, so this is a three-way bounce, hit target, and the market gaps down. Okay, so this is not a good development. However, having said that, the fact that the market went up to 19,000 and bounced and closed like this, again, this is the exact opposite of what we saw in the weekly time frame, suggesting lower prices ahead. The lower prices has actually happened, but the fact that the market hit low of 19,000 and bounced and closed in this formation suggests that maybe the buyers are also in the market. So non-conclusive, okay, but I think we have to go with the flow that near term, there's a possibility the Hang Seng may actually remains well bid. Okay, we have a bullish engulfing bar on the daily time frame, okay, at the low of 19,047, followed by 4 5 days of rally. So we can see that this bar alone and that reversal bar on the weekly time frame is suggesting that maybe a temporary low at 19,047 could suggest that a bottom could be near term in place. Okay, now remember there was a gap here. Okay, the low end of the gap is about 22,300 plus. Okay, this gap here remains to be filled. Okay, the low here is 22,441 and a half. So as the market goes higher, it could fill up this gap. I think that is a natural progression to fill up this gap here. Okay. In the 4 hours time frame, do we see massive buying? No, there is no massive buying. Okay, but again, on the 4 hours, there was a bullish engulfing on the 4 hours at the low, and which is something that we also see in the daily time frame. We also see that in the weekly time frame in terms of reversal bar. So this low here may actually hold. The market may go up, may come down, but I think near term, this low here may be uh, uh, very well defended. Let's take a look at the Nikkei. The Nikkei had a very good running, very good run this past week. Okay, so in terms of the monthly time frame, you can see that this is another potentially very bullish development. Okay, of course, there's 2 more weeks to go before the month, and this could still change. But as it is right now, there is a possibility that the low at 30,300 and 300 plus, okay, seems to be holding. There was a minor breach of the previous low, okay, followed by a counter trend rally. So this is suggesting that could be buyers are already in place. This is the weekly time frame. The market has the potential to do another three wave targeting 28,500. So far, it's not a very strong rebound. Okay, it is encouraging, but it is not a classical rebound. Okay, because this bar here did not close anywhere near above the 50% mark. Although if you take these two bar into consideration and put them into one bar, it does appear that there is a possibility of further gain, at least in the near term, for the Nikkei 225. Take a look at the daily. Okay, very strong rally here, followed by a pullback. So by and large, when you look at it, I think it suggests that near term there still could be some residual strength in this marketplace. This is the 4 hours time frame, three wave bounce. Okay, we will have to see whether this will bring us anywhere near. Okay, let me take a look at from this low here. I think it hit its target three wave bounce. Now, if I extend this into 1.236, yeah, it almost hit target. Okay, so going forward, there is very little in terms of incentive to go and buy, because you can see the last few bars here, they are all very, very short compared to the regular bars here, very, very long and elongated. Here, the activity suggests that the market is not very actively traded. So you can see the individual bars here are quite short. Okay, does not suggest to me that is enough follow through. But again, we are going to a new week. We will have to see how the Asia markets react when it opens tomorrow. Okay, if we want to take a look at the European, let's take a look at the UK. Monthly time frame looks encouraging. The low is 7,531. Looks like the low here may actually hold. In the weekly time frame, looks very positive so far. Like I say, individually, these two bars does not suggest that there's imminent bias in the marketplace. But if you take these two bars and combine it into one, it does give them a little bit of idea. Okay, but it's quite a big drop here. So whether it can recover all the way beyond 8,744 remains to be seen. Daily time frame, consistent, but there is a three wave here. You can see there's a three wave bounce. I think that three wave bounce can be better seen in the lower time frame. Here we have a three wave, and all three wave, by the way, are corrective move. We need to say that once the market finishes three wave move, it is getting ready to resume its original trend. Okay, here it has hit more than 1.236, suggesting that it's still a little bit more strength. Hard to say. Over the last over the last 2 days of trading last week, the momentum seems to have been lost. Okay, the bars are getting shorter and shorter. Okay, again, we are into a new month, so let's see what happens. I don't have very strong view for European markets. Even for the DAX, this is the DAX monthly time frame. Looks promising that the low at 18,813 may actually hold. And in the weekly time frame, again, you have to combine these two bar into one to suggest that there is something more. Okay, not particularly a strong development just yet. Here, maybe a little bit more upside, and this could be seen clearer in the lower time frame. We get a three wave. And if it's going to be a three wave, it's going to trade beyond the point of invalidation above 22,600. Yeah. If the market do a three-way equality, it will be beyond this point of invalidation. It will flip the market to a positive move. Okay. And the reason why the German equity market is firmer is because now the German government has already said that they want to borrow to actually uh, be spending more on defense. And that is giving a lot of people the idea that if there's going to be a lot more economic activity surrounding the building up of their military, that could mean more gains ahead. Okay, but I'm not sure where this will all lead to. Right. Okay, I'm done with equity markets. Let's see if you have any question for me. I think there's one new question. We don't say, so in my view, we should stay neutral in US equity markets. For now, yes. Actually, for now, all the way until maybe the first week and second week of next month. Okay, just be aware. I do think something is major is going to happen in the month of May. Okay. All right. Continue to look at the markets. I want to show you the dollar index. Here we have the weekly time frame. We can see the dollar index practically, dying. Okay. So here I have put a remark here for myself. Downward risk is peeling off, meaning to say that be very careful chasing this thing on the way down. Selling dollar at this current level is a little bit uncomfortable for me. And this is a larger degree three wave. Now, this high here was actually traded in September of 2022. Okay, so 11470 down to 99.2, and then a bounce back to the beginning of the year. On the first trading day of this year, market hit a high of 110, and since then it has not looked back. It has been falling. Okay, so currently it traded to a low of 98.8. Okay, and I think there is scope for the market to lose a little bit more ground, targeting the 95. Here, the 100% AB equal to CD targets 95.5. So do you think it is still worth chasing at the break of new low? Maybe if you're fleet-footed enough, you may be able to make some money on the way down, but as the market goes lower, it becomes very, very dicey. Okay. I do put another note here, expect some kind of explosive move in the dollar. And that could be also tying in very well with the idea that if some kind of war escalates, the the dollar will once again act as the currency where they seek refuge. Okay, so this could be playing into a scenario whereby people are holding on to dollars because it will perform its usual role of being a uh, uh, safe haven currency. Just be aware of that possibility here. So based on what I can see, the weekly time frame suggests that there's a little bit more room to go. And in the medium term, in the daily time frame, yes, still negative. There is nothing positive on this move here. And immediate target is somewhere around 95.5. Okay, so very, very similar to the weekly time outlook. So unless there is a bounce, okay, I think the market has not hit bottom yet. So there is still a possibility if the market ever bounce, especially into 103 area to 104.30, I think that bracket will be good. But whether it has enough strength to bounce so much remains to be seen. I think if it's not able to do that, even if it can rebound by 50%, I think that is also a good level to start watching for potential reversal signal. If the market is not able to rebound all the way to 103, let's say it hit only 101 half, and then started to lose momentum, that could be a good area to consider if you want to sell. I think selling at a 50% bounce is a lot more comfortable, okay, compared to where we are right now. So the target is somewhere in the mid 95. I think it's still enough room. Now in the 4 hours time frame, we have a bit of a consolidation. Now this part here is not indicative enough for me to say that the buyers are in place because this one goes into a long weekend for Easter Friday. So I do not see this as evident that the buyers are in place. But however, having said that, if the market actually bounce, okay, anywhere near the 50% mark, like what we saw earlier on, that could be a good area to look up for. Buyers is still for further losses in the dollar. So if we get a bounce here, 101, I think from here onwards, start to look for the loss of momentum. If there's going to be one, I think that could be the one. So if you understand the dollar index, everything else looks very easy right now. Now in the monthly time frame, we can see obvious strength in the currency, especially the euro. You can see two solid rally here, and we are only halfway into the end to the month of April. So if by the end of this month the euro space elevated, okay, leading all the way into, let's say, middle of May. Look out, because this is a three-wave move targeting 1.19 in the euro dollar. So anytime from now until the, let's say, middle of May, if the euro versus the dollar hit 1.19, stop chasing, because it has technically hit the three-wave equality level, and that makes it very, very vulnerable to the downside, because don't forget, this is a predominantly bearish market. Okay, this bounce that we see from 95 cents, okay, is part of a corrective bounce. Equality is 1.19. Be very, very careful. Okay, so here we can see that the three-way bounce is not anywhere near the end. I think there's still scope for it to go even further. So this is, let me extend the chart for you. 1.15, 1.14780. Okay, this does not look complete. It does look like it will extend beyond this level here. Okay, so refer to the higher time frame, which is the monthly, for clues as to the ultimate target. Now, in this time frame, which is the daily, we can see the euro has turned decidedly bullish. Not so much on the strength of the euro, but I think it's the weakness in the dollar. Okay, watch out for any kind of pullback. If we get a pullback in the 4 hours, ABC targeting 1.12, look for level to buy. Okay, if this is, because this market right now is quite bullish. Okay, and this pullback is quite possible. Even if you see a pullback to 1.12, look for level to buy. Okay, I think the same could be said for the sterling as well. Sterling has 3 months of consecutive gain. Okay, I think there is still a bit more room for it to go further, possibly to target a 1.42 area. Okay, and when we look at the day and the weekly time frame, this is part of a consolidation, but you can see the lows are getting higher now. Okay, so there is possibility that this current high here at 1.33 will exceed the 1.3440 in the early part of this coming week. Okay, so I do expect this high here to be taken up, and if that's the case, we have higher lows, higher highs, and if this one manage to go beyond 1.3434, it will be a series of highs. Okay, so watch out. So this is the daily time frame has turned positive. This is the daily time frame, very, very positive, and it closed near the week's high. So the sterling looks good for short-term gain if you're going to be looking to buy. But where can you buy? That's a big question. In terms of the structure, I think you may not be able to buy at a good price for sterling, unlike in euro. Okay, so if you miss, if the sterling doesn't pull back to a certain levels, whereas the pullback happens in a three-wave for the 4 hours time frame in the euro, then maybe the euro is a better bet if you're going to play the weak dollar scenario. Let's take a look at the dollar versus the yen. In terms of weakness, you can see that the yen is getting pretty strong. Okay, so if that's the case, the three-way pullback here may actually pan out. Of course, we are looking at the monthly time frame. If this is the case, somewhere here, okay, at 137 could be where the market may be heading, for all we know. All right, one just below 137, just a marginal low below the most recent low at 139.58. So looks like near term the dollar weakness may actually continue. Weekly time frame, again, this three-wave pullback is quite obvious. Once the market goes below 139.58, okay, be very careful chasing on the break, okay, because it's part of the corrective pullback. Because a near-term target, is anywhere between 131 to 136.5. Is it going to be enough for you to get up if you sell on the breakup of this low here? I would not think so. Okay, so be very careful chasing the market lower as the market breaks this near-term low at 139.58. Same thing, this three-wave is quite obvious. Okay, we are coming to an end, and if the market actually hit 136.5, it will turn negative. Okay, right now there is a bit of a rebound going on. Do not buy this dip. It is not time yet. Okay, so if I have a choice, I won't be buying the dollar for time being. Let's take a look at dollar Aussie dollars. Okay, Aussie dollars has a very good closing this past week. This is as strong as it gets. Of course, there's two more weeks to go. But if at the end of the month, this is how it looks like, it is a very bullish development for the Aussie. After all, the Aussie has hit below 60 cents to as low as 0.5914, and then followed by this. From where it was at 0.5914 to the closing price at 0.6380, yes, gone up by quite a fair bit. So are we seeing something similar? This bar here on the weekly time frame is also very bullish. Okay, although this past week there's only the market wasn't very active, but I do suspect that it will continue to trade higher. There's a very high likelihood that low, at least temporary, is in place in the Aussie dollars at 59 cents. Daily looks like it's going to break out soon. Okay, this market has been running up so aggressively. Now, this is the point of invalidation. The market trades below 0.6430. Okay, it will flip the entire chart, cancel all these pink color box and keeping only the green, meaning to say the market will turn decidedly bullish in the medium term. Near term, I believe he has already turned positive. This is the near term 4 hours time frame. It has become very bullish. Okay, currently look at this low here for some kind of support if it ever come. Okay, so the pullback that we saw towards the tail end of the week itself has been pretty shallow. So I think it's quite expected to see very shallow pullback because the market right now is definitely the sentiment has flipped to favoring the major currencies. The same thing can be seen also in the Kiwi. Okay, if you look at the Kiwi versus the dollar, quite similar. Okay, here we have the monthly time frame. This is the highest close in 4 months, and we are not even at the end of the month yet. So, or if the market closed at where it is currently at just under 60 cents, 0.5930, this is the highest closing so far in the last 5 months. Very interesting. In one single month, in fact, in less than a few weeks, in 2 weeks, you can see that in 2 weeks, the market has closed the gap, and this closing price here is actually the highest in 5 months. So this is a very bullish development. So for those who have not who wants to participate in the currency that is only starting to move, maybe the Aussie and the Kiwi could be a good candidate. Okay, because the move in the euro and the sterling has been for quite some time already. So as far as the other oceanic currencies are concerned, I think the Aussie and Kiwi looks relatively ideal for me. Okay, you can see very strong recovery. 55 cents and the bounce now is almost 60 cents. So that's a five, uh, 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 500 points move here. Worth considering. Okay. Near term, no chance to buy at good prices so far. Look out for 58 cents. If the market can come back to 58 cents, that could be as low as you can get. Right now, the momentum seems to be favoring, in particularly, all the major currencies. Let me see if there are any questions for me to answer. Anonymous, why do I have a specific date, May 19? For those who have been following me for quite some time, you do understand that I follow this guy called Martin Armstrong. He has a blog which I subscribe to, okay? And this guy is quite an interesting character. If you pick a date, watch that date because something may happen on the date. And he specifically mentioned the week of May 19th. He didn't say May 19th something is going to happen. He said the week of May 19th. Now, May 19th is actually a Monday. Okay, so starting from May 19th onwards in the whole week, okay, not sure which day it will happen. Okay, something is going to move the market. Okay, just be aware. Okay, that is exactly 1 month from now. Now, Lily is asking when the dollar index starts to reverse, what is influence on US equities, gold and commodity? Is the strength of the dollar might signal reversal of US equity markets? A few things here. I think I've hinted or I've said as much. somewhere in the May 19, the week of May 19, I think a geopolitical event may cause the dollar to move, the gold market to move, and that may also spill over into equity markets. Because if something bad happen and capital flood into the United States, the first thing they will do is it will cause a rally in the dollar. And then once that is converted to dollar, whichever currency that was converted into dollar, and the money is likely to find its way into the equity markets. So it could be on a knock-on effect. First, it will spill over and cause a rally in the dollar, which will also cause a corresponding rally in equity markets. And what will that do to gold? And this time, there is a possibility as equity market goes up, gold also go up, because if there is going to be a geopolitical event, gold right now is very, very sensitive to any kind of escalation in the geopolitics. So we may see a situation in which the dollar goes up, the gold go up, the equity market goes up. So it's unusual because normally they don't work like that. Okay, but we have seen this past week, no, 2 weeks ago at the beginning of April, we see the dollar and the bond market and the equity markets all go down at the same time, which is something very, very unusual. Okay, so we are definitely in situation in which we may have not seen very often. So just be prepared for the unexpected. So let me go down to gold. Okay. Um, Let me remove this. So you can see gold market is still charging away. Very, very, very big move here. So this coming week is going to be very interesting. Okay. This coming week, starting tomorrow, gold prices, if it goes higher, which it may, okay, look out for some kind of topping up around 3,005. This is relative to COMEX prices. Right now, the COMEX premium relative to the spot market is about $16 odd cent. Okay, let's say it's $17. Okay, so if the COMEX go hit 3,500 and then it starts to struggle. Okay, monitor the lower time frame in COMEX Gold, okay, especially COMEX Gold. Once you see the correspondent struggle in the gold market, followed by perhaps heavy profit taking, that will be your cue that the temporary high is in place in gold. Okay, so going into this week itself, it will be very interesting, and then it will be followed by 2 weeks of correction going into the second week of May. Okay, so in terms of timing here, I have something to work with. Not sure whether this will pan out exactly as what Martin Armstrong is saying, but I think he has mentioned these few dates. So I'm definitely going to keep my eyes peeled. Okay, going into this week, I think if there's going to be any serious run up in gold, be very careful chasing. In fact, once you see the market struggle, okay, and profit taking seems to come in, be aware that there's a possibility a high could be in place. Okay, so this is not a good week to continue to chase. If you are chasing the gold price on the way up, be very, very anxious to take profit. Okay. Okay, so from the technical outlook itself, it does suggest that there is a lot more room to go. Okay. Here the same thing, likely top at 3,005. Okay, wait for a pullback in the first week of May. So technically speaking, there's nothing to suggest that sellers are in. In fact, I think we will see follow through buying. New highs will be likely be created this coming week, in the coming days. Okay, so new highs not expected, but not totally unexpected, but be very careful chasing. Whether you're looking at 4 hours or daily, it suggests that the market is relatively firm. There's a bit of a counter trend in place, but you can see how this bar closes. This pullback is so shallow and it's outside the green color box. And I think this support that higher prices are imminent. Okay. All right. Gold prices seems to be wanting to go higher, but be careful of a nearby top. So in the monthly time frame, this is the silver market. Silver, if it's followed by a topping out in the gold market, the silver equivalent is about it's about $36 per ounce. Okay, silver has been underperforming. Okay, we want to see whether once the gold prices goes into a corrective mode, whether silver will take over. This is the weekly. Weekly market has hit a three wave, followed by a big bounce. Now, the way it closes here the week before is very interesting because it closed beyond the 50% mark of this bar here. And this is usually seen to be a very bullish development. Okay. Daily time frame has not turned we have a counter trend in place. Okay, that's for sure. We want to see whether the market can go all the way and take up $34.58. If we can do that, the market will turn decidedly bullish. Here we have the three-wave pullback, hit equality. Okay, here A, B, C, hit equality at $28.44. Overtake by 10 cents before the market find a bottom and then starting to rally. So everything else looks positive. Okay, if you just look purely at the chart, it does suggest that the market remains very, very positive. The only time frame that the market suggests that is in bearish territory, the bearish dominant bias is in the 4 hours. Okay, so this is part of that rebound. But you have to refer back to the higher time frame. The higher time frame remains. Let's take a look at the. This is still the dominant trend, which is bearish. The weekly time frame is also bearish. So by and large, you can see the dominant trend in the higher time frame is bearish for silver. Any question? Let me see. Goldman Sachs forecast that gold may reach 4,005. It didn't say it's going to happen this week. Eventually, it will get there. In fact, I myself think that $4,000 per ounce is not something that cannot happen. I think it can happen. Okay. It says Goldman Sachs think that gold can go to 4,005 by the end of the year. I think everybody has a view of the gold market. I myself is actually quite bullish. I do not believe even if the market have a temporary high here, I think there's still scope. Okay, because we are only in the Q2 of this year. We still have more than 8 months to go before the year end. Okay, long way to go. 4,005 is not necessary, not achievable. I think it is a possibility, but don't gun for the top end of the range. Right now, I think 3,005 is a reasonable top. Okay, then if we have a bit of a pullback before it gathers enough stream to assault the $4,000 per ounce, I think that is something that is doable in the not too distant future. But to gun straight for 4,005 is a little bit of a stretch. Okay, now let's take a look at the oil market. Now, oil, earlier on, I showed you the oil has actually rebounded very nicely, right? So in the higher time frame, the market has actually turned bearish. Okay, so the long term based on the monthly time frame now has a bearish connotation. If this bearish connotation lasts, for all we know, there's still a lot more scope to go. Okay, I cannot see the market going to $35. Okay, if it's at $35, a lot of oil company is going to go bust. Definitely, the American gold producer, oil producer will go bust. Okay, Russia will definitely go bust. Okay, Russia oil needs to stay above 50 odd dollars per barrel. Okay, so the market hit a low of 55 before it bounced. That's quite telling. Okay, the low so far this month is $54.76. So for the oil prices to go much lower than $55, a lot of marginal gold producer will go bust. Okay, but that's because I think the Saudis are playing a game here. Saudis now has been trying to punish those who do not keep to the end of the bargain, especially the OPEC plus members, especially I think they're referring to Russia. Now, Russia needs price of oil to stay above a certain level, but oil prices has been coming down, so it's affecting their ability to finance the war. Okay, so for the Russian to actually not kept to the quota of their production, okay, I think it's a safe assumption that they have actually produced more than what they agreed to produce. So that has caused, I think, some kind of reaction from the Saudi, by far the largest oil producer, right? So now prices has come down to as low as it gets, is rebounding. So the way the market closes the week before is also telling me that there is a possibility a low, at least a temporary low is in place. So this is followed by some more gains in the oil market on a weekly basis. Now, this is on the daily basis. A counter trend now is in place. Watch out for $58.37. If it come back here, there will be support. Okay, because after the initial run up, market pullback and was supported at $58.37. So if the market do pull back, do expect this level to somehow provide some kind of support. But I think it's beginning to look attractive to go in and dip our feet into the oil market. It does looks technically strong. Okay, the possibility of the market uh, finding a temporary low here at $54.76 is actually quite high. Okay, this did not pan out. So now three wave gunning for $66.40, and then we wait for. If you miss this box, wait for the next box. Okay, then you say that after the market ran up all the way to $67.75 and then start to ease, then we go into a new perimeter, then look for new levels to watch. It's perfectly okay to miss the initial run up, wait for the second one. Okay. Okay, any questions so far? I think there's no new question. Okay, no new question. I will follow up by looking at Bitcoin. Although the crypto market has been very, very quiet of late, okay, but I think it could be the calm before the storm. Okay, the market has stopped falling. That's something good for those who are core crypto, right? $74, 74,500 seems to have found a bottom. Okay, there is no news in the marketplace. Okay, perhaps we had to look for the Federal Reserve to provide some kind of direction. Any movements on the interest rate front should actually create some kind of interest or buzz in the crypto market. Right now, there is simply no catalyst, no momentum whatsoever. Okay, with the time frame, you can see that the market has been doing this, hit a low of 74,500 rebound. Okay, but it didn't follow through this past week. So it does not look like there is enough momentum behind this bounce here. On the daily time frame, same thing here. It's part of corrective move, hit equality marginally below the 76,800. So now we are a bit about. I think it's gonna do sideways crawl for a while. Okay, but I think there's a very good chance that 74,500 is the temporary low. So no incentive to be in the crypto market as far as I can see. Ethereum is still falling because this is quite natural. I think the market here is continuing to fall, and based on the monthly time frame, this is the fifth month in a row in which prices of Ethereum has been closing lower and lower. So I think the Ethereum price action is very different from Bitcoin. Okay, it looks very, very different. At $1,384.66, the week before it actually hit the 88.6% retracement, which is very, very deep. And then right after that, you can see this bar here suggesting that there is a possibility in this low may hold, but there is no follow through buying this past week. Very little. Okay, there is a counter trend in place, but very, very shallow. Does not look very encouraging. So if I'm you, I'm going to stay away from crypto for a time being. Okay, since there's nothing to see in the crypto market. Any other question before we end the session? I think there's a new question. Let me grab this new question. Natural gas. Oh yeah, talk about it. I forgot to update. I'm so sorry. I did promise you natural gas. Yeah, I have it. I did not add natural gas. Oh yeah, I did. Sorry. Okay, natural gas. Uh, Overall bearish on a monthly time frame. The bounce here appears to have ended just below $5, and this is followed by a rather sharp pullback here. Of course, this is the monthly time frame. Let's take a look at the weekly. The market was rising steadily. In fact, there's a possibility that the low here at $1.58 could be the low. And what we are seeing here is part of that sideways movement, perhaps coming under a bit of a profit taking after running up to just under $4.90. So this pullback eventually is going to subside. And if it does subside and starting to look up again, I think there's a very good chance if you can put your stop below this low here for December last year at $1.58, It's a long-term play. Okay, I think there's a very good chance if there's going to be any escalation in the war, especially in the Middle East. We all know that U.S. has pre-positioned a lot of military assets in the Gulf area. There are two carrier groups, lots of B-2 bombers stationed in Diego Garcia in the Indian Ocean. I think if the U.S. decides to attack Israel, not Israel, Iran, then there is good incentive for these energy prices to go up. Okay, based on the technical consideration, there is already a preliminary counter trend in place. So let the market drift down a little bit lower in a technical play. Anywhere near $2.56, it becomes very attractive, in my opinion, to look for buying opportunity. Near term, we have that three-wave move targeting $3.14 to as low as $2.88. Let the market drift lower. I think in my mind, I'm looking for opportunity is to see if I can buy on a dip. On the lower time frame, such as the 4 hours, you can see that this has already turned positive. This market is already positive. Huh? So now we are at the edge of this very deep retracement, which is $3.40. Anything lower will be a bonus, such as $3.14. That would be a bonus. Okay. So in my mind, lower to buy, possibly. Okay. Anything else? Any more question for me? No question. If there's no further question, I thank you for your time and I shall see you guys next Sunday. Okay, thank you. Bye bye.